Let's talk about a feeling every investor knows. You open up your app, you see a sea of red, and your stomach just drops. The news is screaming about a crash, and every single headline feels like a punch. But what if all that fear is actually pointing you toward a massive opportunity? So there it is, your portfolio is bleeding. And your gut reaction, your every instinct is screaming at you to panic, to sell, to do something before it gets even worse. But hold on. Before you hit that button, let's take a deep breath and really understand what's going on. You see this word everywhere. It's designed to grab you, to scare you. Crash. Then they throw this one at you. Recession. Now it's not just your stocks, it's the whole economy. The fear gets bigger. And then there's correction. It sounds a little softer, right? But the message from all three of these is exactly the same. Prices are falling fast, and you should probably be freaking out. But should you? Here's the big secret. While most people are panicking and selling, a small group of people are seeing something totally different. They see a sale. I mean, a historic, once-in-a-decade sale. Because history shows that these very moments of peak fear have created more new millionaires than almost any other time. This could actually be your chance. Okay, so to take advantage of it, we first need to understand the beast. Why do stock markets crash anyway? Is it just random chaos, or are there patterns? Things we can actually learn from? Well, it turns out it's not so random. Most crashes come down to one of three main things. You can think of them as the three horsemen of a market apocalypse: a bubble bursting, a bad economy, or a black swan, a total shock to the system. First up, the bubble. Oh man, this one is all about pure human emotion. Hype just takes over and people start throwing money at an idea, not an actual solid business. Remember the dot-com bubble? If you had .com in your company name, you were golden, even if you had zero profits. But that kind of hype, it never lasts. And when reality finally sets in, the sell-off is just absolutely brutal. And I mean, look at the damage. The tech-heavy NASDAQ index lost almost 80% of its value. Trillions of dollars in wealth just gone. It's a pretty harsh reminder of what happens when stock prices get completely disconnected from reality. It took 15 long years for that index to get back to where it was. The second cause is a bit more straightforward. The economy just gets sick. When inflation is sky high, your money doesn't go as far, so you spend less. That means companies make less money, which naturally spooks investors. To fight inflation, central banks then raise interest rates, making it more expensive for companies to grow. It's like a domino effect that can drag the whole market down. And then you have the black swan. This is the total wild card, the thing that nobody, and I mean nobody, sees coming. It's the event that just changes the world overnight. Think about a global pandemic or a major war. These things create instant, massive uncertainty. And the one thing the market hates more than anything else is uncertainty. And we all just lived through the perfect example of this, right? In early 2020, when the world was waking up to the reality of the COVID-19 pandemic, global markets fell off a cliff. They dropped 30% in just a matter of weeks. That was a textbook black swan. It was sudden, it was terrifying, and it was a complete shock to the system. Okay, so we know why crashes happen. But here's the million-dollar question. Are they normal? Or is every crash a sign that this time it's different? Let's zoom out and get some historical perspective. You know, what I love about this chart is how it makes something that feels so chaotic look, well, normal. Downturns aren't just normal, they happen with some regularity. A small dip, a pullback, happens almost every single year. A bigger one, a correction, every couple of years. These aren't glitches in the system, they are the system. It's the natural rhythm of the market. And this is the most important slide of them all. Just look at this timeline. The oil crisis, Black Monday, the 2008 meltdown, the COVID crash. At the time, each one felt like the end of the world. But what do they all have in common? The market always came back. And a lot of the time, it came back even stronger. The people who got crushed were the ones who sold at the bottom. The ones who got rich, they just held on. So if we know that crashes are a normal part of the cycle, and we know that the market has a perfect track record of recovering, how do we make that jump? How do we go from feeling that panic to seeing the profit? It really all comes down to one simple but powerful shift in your mindset. This quote from Warren Buffett says it all. I mean, the guy built his entire fortune on this one idea. When everyone else is panicking, when fear is at its absolute peak, and people are dumping their best assets for pennies on the dollar, That is the moment of maximum opportunity. A market crash is basically a fire sale on the world's best companies.
All right, it's one thing to say be greedy, but how do you actually do it without getting burned? You need a game plan. So let's get practical and walk through the smart investor's playbook for not just surviving a crash, but actually coming out ahead.
It really comes down to this. On one side, you have the emotional reaction. That's panic selling, which just locks in your losses. It's trying to be a hero by perfectly timing the bottom, which is basically impossible. And it's buying a stock just because it's cheap without realizing the company it's failing. The smart move is the exact opposite. You stay calm, you use a system, and you focus only on high-quality businesses. So instead of trying to guess the bottom, smart investors use a system. It's called dollar cost averaging, and it's so simple, it's beautiful. You just invest the same amount of money on a regular schedule. Let's say $200 every single month. When prices are low, that $200 automatically buys you more shares. When prices are high, it buys you fewer. It takes all the emotion and guesswork out of the picture.
And this right here, this is the golden rule. A crash makes everything look cheap, but that does not make every company a good deal. A business that was failing before the crash is still a failing business. It's just a cheaper feeling business now. Your goal is to find those amazing, profitable, dominant companies that are on sale for one reason only, because the entire market is panicking.
Let's look at a real-world example. Take a great company like Amazon, back in the 2008 financial crisis. Before the crash, if you had $1,000 to invest, you could have bought about 11 shares. But if you invested that same $1,000 during the worst of the panic, you would have walked away with 25 shares, more than double the ownership in a fantastic company for the same price. That's the opportunity we're talking about. So let's wrap this all up into a final checklist. Number 1, stay calm. Emotions are your enemy. 2, do your homework and know what you're buying. 3, don't put all your eggs in one basket. 4, remember, this is a marathon, not a sprint. And most importantly, if you can't explain what a company does to a 10-year-old, you have no business owning its stock.
Because make no mistake, another crash is coming. It's not a question of if, it's only a question of when. History absolutely guarantees it. And when that day comes, you're going to have a choice. You can join the crowd and panic, or you can see the crash for what it really is. One of the greatest opportunities you will ever have to build life-changing wealth. The choice is yours.